Hello everyone and welcome to a webinar in collaboration with SuperReturn titled How to Win in MENA's Private Education Market. Over the last few years, we worked in every major MENA market across different sectors of education. Through this webinar, we hope to talk about some of the key themes underpinning the growth of the market, and we're glad to have you join us today. My name is Ashwin Gopalakrishnan. I'm a Vice President at EY-Parthenon's Emerging Markets Education Practice. Having had a quick look at who is with us today, we have more than 100 people who are dialed into this webinar, and that's fantastic. Please bear with me while I run through a few housekeeping points. For any technical questions, please click the question mark widget at the bottom of your screen. I'd encourage you to submit any questions to our speakers through the course of the webinar using the Q&A button. We can't get to all, but we'll try to address as many of these as possible at the end of the presentation. We'll also be live tweeting this webinar, so you can join in the conversation using the hashtag SRWebinar. I'll also encourage you to answer the survey question which will appear on your screen at the end of the webinar in case you'd like to get in touch with us. Now that we're through the logistics, I'd like to introduce our speakers. We have on call today Robert Lytle, Managing Director of EY-Parthenon and Head of our International Education Practice. We have Jeremy Panacheril, our Dubai-based partner who leads all our Middle East and North Africa education work, and Amitabh Jhingan, partner and head of the EY-Parthenon's Education Center of Excellence, which covers emerging markets. If you have any questions during the presentation, welcome to send them to us using the Ask a Question box on the left of your screen. Having said that, I'll hand over to Rob Lytle.
Good morning, everybody. This is Robert. Happy everybody could be with us this morning. I'm going to spend 2 or 3 minutes here introducing just a little bit about EY-Parthenon before handing it over to Amitabh. The slide in front of you just shows real quickly a little bit of the footprint of EY-Parthenon. Parthenon for about 25 years was a boutique strategy consulting firm focused on growth strategy and areas like that. And in 2014, we merged into Ernst & Young and became their strategy arm. And today we're obviously a global firm, about 1,500 people spread across the globe, and working in all the verticals you would expect. Obviously, along the way, we've built up a large education practice that we think is fairly unrivaled in the world. And on the next slide here, what we really do at EY-Parthenon is we're kind of the front end of strategy development. So most of the work we do is around growth strategy, optimization strategy, and then obviously a tremendous amount of transaction support, which I think many of the folks on the phone are familiar with us for. And we do that within education across a number of different subverticals. There's really about 5 places that we tend to do most of our work in. First is around governments and foundations, so working with ministries, education, big global foundations around the world that are focused on education, like the Bill and Melinda Gates Foundation. And then we do a lot of work in primary and secondary schooling. So whether it be a private K-12 or a private pre-nursery school, or primary secondary school, or a local education authority somewhere in the world, we've done a tremendous amount of work with them. So we have a good understanding of what the deliverers of education services are looking for, which allows us pretty strong insights for those who are selling into the space. We do a lot of work in university, again, be that a for-profit private university, a public university, a nonprofit university, a big, small, elite or non-elite vocational training and things like that, but tremendous book of business of that around the world. And the 4th area is content and service providers. So anybody who sells into the space, be it a test and assessment company or a ERP system provider or something like that, English language training, we've got a tremendous set of experience there. And then finally, obviously, transaction support, which is probably the focus of many of the folks on this phone call as well. In terms of geography, around the world, the colored in countries here, places we've done on the ground education work in the past. I think this one covered about the past 7 to 9 years, but done close to 2,000 education projects over the last decade or so, and have covered 95 some odd countries. And so the footprint we have around the world is pretty spectacular. And those are the places we've done work, putting if you will, boots on the ground. To dig in and due diligence is to work with a company on a growth and optimization strategy. And then Finally, if you just think about our coverage on page 9 here, these are the folks around the world who can serve as, if you will, your point of contact. Although we're not that big of a team, so we all know each other quite well. But I cover North America and the world, obviously, with a large team here. Out of Central America, Alfredo. Down in South America is Philippe out of Sao Paulo. Matthew Robb and a very large team covers Europe. Jeremy, as Ashwin had mentioned, covers Middle East and Africa. And Amitabh, who you'll be hearing from in a bit, covers Southeast Asia. And then we've got Lin Li and Claudia Wang out of China, where we have a really large operation out of Shanghai. And Captain Friday covers Oceania for us. But that's backed by a team of about 60, 70 some odd people globally who focus all their time on education. Before we launch this, we want to just ask a quick question to everybody, and if you don't mind taking a moment to push the button on this and quick poll. The question is, have you ever made an investment in education? And if you wouldn't mind, I'll give you about 15, 20 seconds to hit the polling button there, and we'll watch the results build up. Well, thus far I've got a 100%er on my slide here, which says either one person has said yes, or remarkably, everybody who's on the call here has made an investment in education. But this has been a fantastic spot for investing, obviously across the Middle East and North Africa over the past couple of years, and that's really the topic for today. And with that, I'd like to hand it over to Amitabh, who will walk you through a couple of the key points before we dig in deep on the Middle East and North Africa. Amitabh, I'll hand it over to you.
Thank you, Rob, and good afternoon, and good morning, good evening, everybody. I think as Rob mentioned, we have been working with clients across a range of emerging markets, and what we wanted to just share with you was some sort of initial thoughts around some common themes that we see across most of the work we've done, in different segments of the education sector across, different markets. So what we're essentially seeing, is, and if we look at, the slide that's, on your, view, what we see essentially is, 6, common themes that, we observe, which is common to most education businesses. While many of these are consumer focused or consumer based businesses, we find these education is an essential service, and that sort of in many ways drives a lot of demand. There's been obviously a lot of interesting recent events around fee and fee related matters, but still the sector consistently delivers price increase, price growth, year on year across markets. There's high visibility on revenue. It's a complex industry, and many of those complexities, however, almost act as barriers to entry. So, access to capital, the ability to understand and manage the regulatory environment are just examples of how some of those complexities actually manifest themselves as, barriers to entry. And of course, while there is significant upfront capital required, sort of relatively low working capital, and, most importantly, the need to consolidate the segment is just, are all examples of why we think, education is a great investment opportunity, and I'm sure many of you are sort of, would agree with that. And if you look at just, markets, as different and as spread out as Singapore, Ho Chi Minh City, Dubai, Nairobi, Mumbai, all of these markets, demonstrate, the same, attribute. That, in turn, sort of, brings me, sort of, and if we move to the next page, if we look at deal activity, that is something that, we, see, a lot of, obviously there's been fairly sort of constant, volume overall in terms of total number of deals. But, what we see is that the share of emerging markets within the deal activity bucket is sort of increasing, year on year. And within this, of course, the education continues to be a more mid-market investment game, and that's sort of represented by overall deal size across markets. I mean, whether it's Southeast Asia, MENA, Africa, you find deal size is generally sort of restricted to the sub $100 million threshold. But we think it's equally important to spot the winners, which is something which results in the billion-dollar deals that also we see in the sector. So that's something that at least we find very, very exciting about the sector. If we think about just actual deal activity, which is the next page that we wanted to look at, it's obviously the large deal activity is obviously concentrated within the English language training, the tutoring test prep space. So while there's a significant amount of deal activity in the direct delivery segments, what we find is that the large deal volumes or the large deals tend to be concentrated within three spaces, which is language training, tutoring test prep, and a few segments of higher education. And this is consistent with what we've seen across markets like Brazil, China, which obviously account for a large share of the large deal sort of volume. We move to the next page where we sort of just do a quick spotlight on investment activity in the MENA region. In terms of just overall numbers, the MENA region probably accounts for somewhere in the range of about 8 to 10% of the total emerging market volume for which deal values are available. With roughly 10 to 12 deals a year that this region's been averaging. The activity, as I mentioned earlier, is concentrated in the direct delivery segments, which is essentially K through 12 and higher education. And that's not surprising, and it's not very different from what we see in many other similar emerging markets. And the UAE obviously occupies a fairly significant share, in that, deal volume or deal activity. And if you look at how at least just some of the larger transactions, and you essentially see how most of the recent investment activity has been concentrated in the K through 12 and higher education segments, with the region also contributing significantly to the global K-12 landscape by almost producing winners and category leaders like GEMS Education, which have experienced a tremendous amount of growth and success in the region, but are now obviously aggressively expanding their footprint across many other similar markets as well as some of the developed markets. So this was just sort of a broader more sort of emerging markets theme, that just what are we seeing across different markets that I wanted to share with the group. With this, I'd like to hand over to my colleague and fellow partner Jeremy Panacheril to walk us all through some of the more detailed dynamics around what are we seeing in the region, as well as what some of the exciting opportunities are. So over to you, Jeremy.
Thanks very much, Amitabh. Hello, everyone. My name is Jeremy Panacheril. I lead the MENA EY-Parthenon Education and Healthcare Services based out of Dubai. Based on the polling question that Rob just asked, it would seem that a very large majority of you are already invested in the MENA market. education market. So I guess my objective here is to try and tell you something which is useful to you. I'm sure you've all participated in webinars like this. And so let me try and do that. So what I'll do is I'll walk you through several slides which will spell out where we think the best education investment opportunities are and how to play them. At the outset, let me just please apologize. I'm nursing a cold, so if it's difficult to hear me or understand me, it's my apologies. In terms of how we should really have this conversation, and perhaps we can move to the first slide in the presentation. Let me first start with some context of the overall market, let's say at 10,000 feet, and then walk you through 4 of the 10 themes we think present opportunity. I'll try to get through all of these topics in the next 20 minutes. Maybe that won't work, but subsequently we'll open the floor for questions. As context, in my humble opinion, the MENA education markets have a lot of investment potential. The demand drivers are compelling, very attractive demographics, regulatory easing, public fiscal constraints. But truthfully, investors are yet to make returns comparable with other growth markets, for example, in Asia and Latin America. And as was previously mentioned, Amitabh mentioned that and Rob did as well, the volume of deal activity is low relative to other growth markets. So in that sense, I think this presentation is really for both investors, financial investors, private equity funds and the like, as well as owners and operators. I think there are several lessons investors can learn from the way capital has been deployed in other markets, how these investments performed, and similarly, how the MENA opportunity could evolve. If education investment strategies tend to follow, let's say, a maturity curve, then investors in the MENA region can think ahead and determine where value can be maximized, and indeed how to deploy capital. In my view, one simple lens through which we think investors can look at the way opportunity could evolve is simply to think of education less as an infrastructure play and more as a service. So historically, MENA investors and providers to an extent have traditionally focused more on an infrastructure mindset rather than a service mindset for a variety of good reasons. I think over the next 5 to 10 years, there are likely to be more accretive investments made by investors who better understand segments within education. Some of those segments exist today, and I think there's a lot of opportunity for new segments to emerge. I think private education in the MENA region is still highly fragmented. In that sense, not dissimilar to other growth markets. From an investor point of view, that's obviously a very good advantage. In our region, with the exception of very few players, most private education providers today are still subscale, right? Amitabh talked about GEMS, clearly one of the more scale-based players. I think providers tend to be historically part of diversified family groups. In that sense, not necessarily education-focused. And if you really think about it, many of them are really heavily focused more on construction and real estate. And sure enough, the first iteration of investments in education, particularly in K-12, have been focused on education as infrastructure rather than as a service. I think as GCC markets have become more affluent, which has been fairly recent, and the volumes of young people needing different types of education has grown, investors have deployed capital in infrastructure. And recent transaction history has centered around that. If you really think about most of the deals that have been done and most of the investments that have been made, they are largely in K-12 or pre-K school groups. That's the predominant focus. I often read press articles, right, which extrapolate the need for, let's say, thousands of new schools and universities. With when I read them, it's eye-popping predictions of the cost of new infrastructure which needs to be built. I think many of us read these articles and wonder how that would even be possible, where the funds would come from, who would take those risks, how long will that take? And if that infrastructure is not built, then what? Does, growth stall? Does unemployment increase? Do expat leave? I think these extrapolations, with all due respect, are largely based on linear models and focused on a traditional mindset that education is really an infrastructure business. To my point earlier on, I think really is more a service business for the benefit of all, actually, right? The public sector, fee-paying parents and students, the overall economy. I personally doubt the region, the MENA region, the GCC region, can sustain the recent historical inflation in the cost of education, right? If you ask anybody, one of their biggest challenges is how can we reduce the cost of education? And if that historical inflation trends into the future, I think it creates tremendous problems for a variety of different stakeholders. And I think that's inevitable if you project it linearly. And if all we do is fill the education and skills gaps in that way, I think it won't be ideal. So in my view, over the next 5 to 10 years, investors and owner-operators will need to focus more. So on this slide, we've illustrated some key themes. And I think we will talk about 4 out of these 10 themes on this presentation. We only have a short period of time, but I think investors will really need to pick their spots over the next 5 to 10 years in order to deliver strong returns. So going through the slides sequentially, if you can just keep the same slide, the same slide with the 10 points. I think the first is the high potential for higher education in Egypt, Dubai, and Saudi Arabia. These are all different markets, and the demand drivers are very different, which I'll expand on later. But we think this is a very important area. The second is there are 2 segments within K-12. The first is capacity expansion in private K-12 in Egypt and Saudi Arabia. And the second is what I would call value K-12 in the UAE and more broadly across the GCC and Egypt. The latter is really just an opportunity to help providers transition their view on education more away from infrastructure, which we all know drives up costs, to service, which is what parents and students value the most. I have 4 children, and if any of you are parents, you will probably all agree that you measure the value of your child's education every evening at dinner. And what happens in the classroom is more important than how big the swimming pool is. The swimming pool is important for some segments, but in oversupplied segments, much less valuable, I think. And there are several opportunities in different markets to evolve the delivery of the curriculum, improve outcomes, and in the same process, accelerate regulatory acceptance. The third opportunity is the consolidation and evolution of the pre-K sector. As regulatory intensity in this sector increases, there's likely to be consolidation for several different reasons. Smaller schools, many of them, particularly in the GCC, which are villa-based, may not be able to make the necessary investments to adapt facilities or even afford the additional staff requirements, right? Nurses and the like. Further, the cost of student acquisition in the pre-K sector and establishing strong word of mouth, particularly in expatriate-focused markets, is very costly. And school networks are able to spread these costs over multiple outlets more effectively. Today, it's still highly fragmented. I think investors have the opportunity to really look at these markets and determine is there genuinely a scale-based advantage. Now, all of this is in addition to the simple fact that early year education improves lifetime educational outcomes. That's without any doubt. And if it's valuable to the children and to the parents, it has to be important to all stakeholders, and genuinely there must be some investor opportunity. If you look at Saudi Arabia in terms of its OECD participation in early years, it's significantly low. If you look at the fourth opportunity, and this is the last opportunity I'll talk about on this webinar, I think it's the way capital markets and investor appetite has shifted towards what we inherently know to be the separation of infrastructure from service. This is what I referred to earlier on. If you think about it, that's PropCo and OpCo in investor terms. The GCC REIT market has exploded in the last 5 years. That's on the back of a lot of private capital sitting in a variety of different sources. And I think educational providers and investors today have significantly more opportunity to actually separate OpCos from PropCos than ever before. This applies to providers who are in the market as well as investors, folks who are trying to buy single school or networks of schools. For investors, I think this creates two very different asset classes, and those asset classes have very different yields and returns. For providers, a lot of whom are family groups, this creates an opportunity to release balance sheet pressure, to divest of your property assets, relinquish some of the commercial debt that you have, and scale the business if that's what you aspire to do. In an environment, quite frankly, where commercial banks are very hesitant to lend, and I'll expand more on that. There are 6 other emerging themes which we won't delve into in more detail, but you can see this on the slide. These are perhaps, I work in this market. Very few people are really talking about these, but we think, if you look at these emerging themes, there's no reason why the MENA markets will not grow towards these, and there's no reason why these opportunities will not create value for investors. If you benchmark how the MENA region is in its nascency versus global markets. So let me talk a little bit about that. Let's look at opportunity number 5 on the slide, right? So there's this idea there's an opportunity in consolidation in support services. For a typical standalone school, this represents a sizable and escalating component of operating expenses. If you were a family group, or if there is a family group that has 1 or 2 or 3 schools, your support costs are actually quite high. If you extrapolated this across all private school providers and assumed that if you did that, there is a scale-based advantage, that would suggest a sizable market opportunity. And there's very few players who have looked at that opportunity. I think GEMS being the notable exception. If you look at opportunity number 6, right, EdTech, which is, I think, for even operators today, is a very new term. In global terms, the MENA region is still in its infancy when it comes to the sector, despite having many of the same demand drivers and market characteristics of other markets where EdTech has grown, right? China being a notable proxy. This business model is attractive in the sense that margins are high. And if you establish a business that is attractive, it can scale across borders much more easily. To use the term that I used earlier on, it is much more of a service than it is an infrastructure play. And because EdTech as an asset class is a capital-efficient service rather than an infrastructure play, the public markets have rewarded it dramatically. And this applies not just to the delivery of education, but also tools to enhance pedagogy, improving teacher training, and so on. And I think for investors, global EdTech and education software companies present a tremendous opportunity, as I mentioned earlier on. If you look at the multiples that those transactions are valued at, they're at significant premiums to education infrastructure assets. And as far as I know, there's nothing in our region that comes even remotely close to that. Moving ahead, I think opportunity number 7 is a term that I use, share of wallet. In that sense, I refer to that to be the spend by parents for the overall needs of their children. That includes, tuition, trips, test preparation, studying for the SATs and so on, art and music, enhanced STEM, for example, coding. I think share of wallet in this sense represents the cumulative spend which parents actually feel is necessary to fully meet their educational and career outcome aspirations, right? All parents dream for more for their kids. And if we had to aggregate that volume of business, it's probably fairly material. At the same time, it's a very fragmented market, and there are many global trends which MENA investors have opportunity in. There's several businesses here that have tried to bring in, non-domestic brands to sort of improve STEM tuition and the like. But as the rest of the world starts to organize around these fundamental shifts, and they are indeed fundamental shifts, I think so will the MENA region. Opportunity 8, in my view, is probably one of the biggest intersections between the private and the public agenda. That is vocational and skills enhancement. This would perhaps be one of the greatest contributors to the overall public sector education agenda. Bearing in mind that with generational change, individuals, and especially Generation Z, are likely to frequently change jobs or freelance, learning pathways today need to evolve towards this. And this is not the MENA region. This is how it's working in the rest of the world. MENA investors perhaps have disproportionately, to date, focused on the segments that can afford mid to high price private education, and in that case, mostly K-12. And while that's indeed an attractive market, right, as I alluded to earlier on, GEMS is an example of that, the actual volumes are elsewhere. And in that sense, these volumes play into broad national agendas, which are trying to accelerate education to employment, which is fundamentally what is driving the region, if you look at it from a volume and a numbers point of view. Vocational and skills enhancement certainly is that opportunity. I think in this segment, participation from government and actually the silent visitor to all of education is actually employers. If you polled employers today, and I'm sure the MENA region is no different than other regions, most of them will say that we don't have enough skilled people to recruit. We're not getting enough people, right? At the same time, we have jobless rates that are extremely high. I think in vocational and skills enhancement, the real opportunity is to try and bridge a variety of different stakeholders. And two of the domestic stakeholders that need to come to the table are the government, public institutions, and employers. And I think there is the opportunity to potentially create sizable opportunity for investment, to increase the time to employability. I think current educational pathways are largely inherited from long-established models from the West, which even in the West are today being challenged in the global arena. I don't think in the MENA region we are any different. Maybe slower to adapt, but in that sense, if I was an investor, I would really keep my eye on that opportunity. Opportunity number 9 is probably much more close to fruition, and it's so simple. It's English language training, or ELT, as we have in our slides, and bilingual offerings. Other markets where English is not the dominant language, in our experience, are seeing growth in ELT and bilingual offerings at double digits above the benchmark education sector. If you look at the delivery of that proposition in the MENA region today, it is still fragmented. There's varied quality with no scale. It's unregulated. And frankly, the government in many cases, especially in GCC markets, is spending inordinate amounts of money to get nationals to go abroad to establish professional English language proficiency. Now, the role that standalone English language training plays is compelling. My wife started a charity school in Bangladesh 7 years ago, one of the first slum schools to teach children in English, 150 lovely children. And the advantage that English proficiency provides them in that setting is compelling. But it is in many other settings across income levels. And from a data point of view, if we look at multiple markets, we see this demand playing out at very high growth rates across many countries where English is not the dominant language. We see that in China. We see that in Brazil. At the same time, we don't really see it here. If I was an investor, I would pay attention to this. And how to play that is important. Opportunity number 10 is smaller, but at the same time, I think potentially valuable. It is educator recruitment and digital marketing. This is more of a specialized, in that sense, a niche opportunity within the overall education market. But if you subscribe to what I suggested earlier, which is not to think of your education investments in terms of infrastructure, but rather as service, then actually you need more people than you need bricks. And to that, the opportunity to upskill educators, train them, improve their ability to deliver the optimal curriculum in exchange for higher retention, which we all know leads to better performance and reputation, makes complete sense. And this applies to educators both within the private sector, which is, as we know, is a largely heterogeneous group of expats, but as well to the national educators for each of the countries in the MENA region, and in particular in the GCC, which has these challenges. In my view, this plays into the public agenda and likely to have commensurate funding and investment opportunity if you bring the right proposition. After all, one of the best ways to measure capacity instead of bricks and buildings is the number of skilled educators. Similarly, in markets which have reached or are approaching oversupply in certain segments, and certainly the UAE and the super premium fee segment is an example, I think the role that digital marketing plays is significant. In my experience, anecdotal data would suggest that per student marketing spend across the UAE K-12 has potentially grown 4 to 6 times in the last 3 years. Right? We've all, if there's anyone in the call who lives in Dubai, you've seen actually so much more marketing related to schools in the last 3 years than previous to that. And while the UAE is still a small market, I think, if there were a business, if there was an investor who looks at helping, schools across the, MENA markets really figure out how to attract students, whether those are expat or national students, digitally, I think there definitely is an opportunity. So if I looked at the next slide, right, so this is sort of an overview of what we think are 10 opportunities, and we'll deep dive on 4 of those. So this is moving from 10,000 feet, to use a term, slightly below that. I think the fundamental drivers of private education continue to be attractive in MENA. The region accounts for, I think, less than 8% of the global population, in that sense still small. But in terms of population pyramids, perhaps second only to Africa in terms of the growth of the youth population. At the same time, the proportion of youth who are unemployed remains very high. And a lot of that is North Africa versus the GCC. But at the same time, even with the high proportion of expatriates within our population base, we have a young population pyramid. When you look at those numbers, within our MENA region, Egypt stands alone, right? And in fact, comes very close to the way Africa is growing. I think the key demographic trend within the MENA region to pay attention to, despite it being on volume basis fast growing, and this is relative to other markets. If you really look at the growth of the youth population in Asia, it's negative. If you look at it in Europe, it's even more negative. We have a young population. The key demographic trend to pay attention to, I think, in the MENA region is, as you can see in the slide, the middle section, it's increasing affordability, right? So incomes above $50,000 are expected to grow at a compound annual growth rate of 7%. And everything that we've seen in other markets suggests that with increasing affluence, you have increasing priorities at a household level, and certainly education is one of those. I would argue healthcare is another. And with the increasing affordability, it increases the demand on education and increases the gross enrollment ratios, which is what you see towards the latter part of that slide. If we move to the next slide, you'll see that in line with increasing affluence, as with every other growth market, as I mentioned earlier on, the gross enrollment participation increases. But separately to one of the points I just made, if the MENA youth factor is interesting, Africa categorically, right, the largest, fastest growing youth population globally, I think presents a tremendous opportunity for, in particular, Dubai-based investors. I think the close cultural and logistical proximity to the overall African market for Dubai is something that anybody who's been in this market is realizing now more than ever before. And I think in that sense there is a lot of opportunity for Dubai-based investors to really think about Africa as a growth market. InvestBridge and Sabis are examples of spreading their wings into the continent. I think that genuinely is a real opportunity. So talking a little bit more specifically about opportunities, let's talk about Egypt, right? So within MENA, Egypt presents, in our view, a very favorable private education opportunity. Leaving aside political and economic factors, which I'm sure everybody on this call is well aware of, there are fundamental changes. Overall higher education enrollment in Egypt has grown approximately 8% since 2015 to 2017, getting to 2.9 million students, right, approximately 3 million, on the back of increasing tertiary enrollment rates. So if you look at that, in 2017, it's approximately 32% compared to 21% in 2011. And this ties back to the slide we had before, right? Egypt actually has, within a MENA context, one of the greatest opportunities because of the fast-growing youth population. The private higher education market in the same period grew 13%. Today, it accounts for only 200,000 people, and it's actually only 5% of the market, from actually 3% in about 2011. There's several reasons for this. Private universities are gaining share because public sector capacity is constrained. There's more job orientation in private universities, more collaboration with international partners, and importantly, the government is allowing foreign branch campuses shortly. Another factor is the currency devaluation has made outbound student flow very costly for the families who could previously afford to send their children abroad. If you look at it structurally, the number of households who could afford a foreign dual degree program offered in Egypt as opposed to abroad is probably 6 times greater. In addition to that, because of the way Egyptian cultural preferences, there's a very high demand for foreign education, with the absolute number of Egyptians enrolled in a UK university or studying for a UK degree in Egypt, although small in absolute terms, it's growing at about 18%. I think the private higher education market is expected to grow at double digits for the next 5 years, and an addition of another 300,000 people. Although the premium fee segment today accounts for almost half of the revenue, enrollment volume growth is likely to be in the mid-price segment. And for investors, that is the big opportunity. Egypt has its challenges, but I think regional investors probably know it better than anybody else. Moving on to the next page, if you look at Saudi, which is dominated a lot of the discussion around investment opportunities in general and education for sure, it has strong emerging higher education opportunity, given demographic need, macroeconomic factors, and importantly, the Vision 2030 program, which aspires, among things, to really create employment, job opportunities that make sense for people, meaningful for individuals and meaningful for the economy. Roughly 2.8 million Saudi nationals aged 18 to 22 in 2022 will likely need to enter higher education. So that suggests there's a likely unmet demand in traditional higher education institutions of about 150,000, perhaps more if you consider the varied needs of students from a program point of view. Now, Saudi has historically perhaps been one of the largest proportional exporters of higher education students. What do I mean by that? If you look at the number of Saudi students, whether they were funded by the government or funded through families, relative to the potential university-age population, it's extremely high. If you think about big exporters of higher education students like India and China, these are countries with over 1 billion populations, 1 billion people populations, while the kingdom has had this steady outbound student flow not far away from the numbers of students from India and China. I think the rollback of government-funded overseas programs, which is inevitable, will put more pressure on local universities, both from a capacity point of view, but importantly from a program point of view. There is a need to really expand and deepen higher education programs, and that'll put pressure on the well-performing public universities. Now, these universities already are under pressure, and I think they will increasingly need to improve their capital efficiency by diversifying their revenue sources, looking at different delivery channels, perhaps online. And there's an opportunity for private sector partners to help facilitate this. Now, all of this creates an attractive but complex opportunity for private sector participation. I think the payer dynamics in Saudi are very tricky, but as a parting shot, I think anybody who's investing in Saudi education has to be aligned with the government agenda. If you look at the next page, higher education in Dubai is an interesting space. While total higher education enrollment grew 3% in Dubai, 2014 through 2018, foreign branch campuses grew more than twice as fast, at approximately 8%. And they increased their share of the overall market from 7% to 41%. And within this, approximately 4 foreign branch campuses accounted for 65% of the growth. So while the overall market is still small, it seems that there is potential for growth in both foreign branch campuses and domestic branded private offerings. And for providers, the folks who are delivering this kind of knowledge, it requires a mindset of how to compete not just in Dubai, but for transnational student flow. I think along with capacity growth, there will be opportunities to expand programs, potentially in partnership with employers, because ultimately higher education has to result in employment, which I think is one of the failings in our higher education market here today. At the same time, visa restrictions have been eased, and there is potentially a lot more opportunity for students to come to Dubai and ultimately get employment. But I think today the maturity level is still low. So today's higher education programs are very concentrated. A lot of business management programs, not necessarily aligned to the job sector, and I think this needs to change. Unlike Egypt and Saudi, which have very large domestic student populations, I think Dubai higher education providers and investors will really need to focus on how to capture inbound student flow, diversify sources of revenue, expand offerings, and really create genuine graduate employment opportunities. Introducing new delivery channels, likely online, is something that I'm not aware that anyone is doing. And all of this in line with what I said earlier on. Look at education more as a service than infrastructure. I think many higher education management teams really need to think about their business strategies and reassess them, and we've assessed several of them to do that. So moving forward, I think the way higher education institutions really need to think, the slide that we're on right now, is really how does Dubai compete with Australia? How does it compete with other markets as student flow to Western markets has changed? We have genuine opportunities here where student source markets, particularly Sub-Saharan Africa and the Caspian region, which have typically not gone to the West or to Australia, presents an opportunity for Dubai. So moving on from higher education, if we move to the next slide, I think opportunities exist in K-12. Now, it's not the typical way investors look at it. I think the way to really think about it is there are differentiated K-12 private investment opportunities in Saudi and Egypt in particular. In Saudi and particularly in tier 1 cities, I think opportunities exist for owners and operators and financial investors to build scale platforms through acquisition. That said, and a lot of this is driven by public fiscal pressure, and in theory, that opportunity exists. But I say in theory because investors, quite frankly, and this is my opinion, having worked in this market for a little while, have been waiting, if I can use the term, with bated breath to actually see this market accelerate over the past 12 months. We've had unprecedented regulatory reform, but no transactions have really closed, and it really hasn't quite happened yet. I think as a result of public fiscal pressure and the need for economic reform, it would seem that there's a lot of runway for growth, and that's what we say on this slide. But to be honest with you, I think the ability to implement those changes takes time and a lot of consideration. And in my humble opinion, the deployment of capital, in the Saudi market it's got to be patient capital. It takes quite a while. If we move to the next slide, if you're a financial investor trying to get access to the kingdom, for which, the demographics are compellingly interesting, and the political and economic reforms are, truthfully, in the region, unprecedented. And I've been here for a little while. I think anyone who's lived here is amazed by what's happening there, and to a large extent incented by it. Getting access to the kingdom is still tough, right? The overall market attractiveness has improved. But once you actually look at targets, investors may see quite a different market than comparable growth markets in Asia and Latin America, and actually, quite frankly, even in Africa. If you're a fund and you look at Saudi, the numbers look good. It stacks up really well, but executing and actually delivering deals at value is much, much harder to do. So I think the emergence of this market opportunity is quite recent. And players today in the market, the owners, operators, have built their portfolios, quite frankly, starting from a base of reputable schools, catering largely to aspirational Saudi households. And they've evolved over time to cater to the needs of a variety of different expat populations. What we have on this slide is an example of how, if you do a deal in Saudi, you will still have a very varied target. It's not exactly what you would expect in other markets. And because of the historically closeted nature of the kingdom, there are actually very few players with size. And the players who do have size have access to land, which is one of the major issues. And as a result, deals are hard to find. They will take longer to close than comparable growth markets. They will have a varied shareholder base with multiple exit valuation expectations, and quite frankly, a lot of issues around land and building. So if you're going to get into Saudi, you have to be ready for that. If we move to the next slide, I think in the UAE, which has traditionally attracted the most global investor interest, I think we see this opportunity for value plays. Lower fee segments which have room to grow. I think in the UAE market especially, there is a real opportunity to deliver propositions that are not infrastructure focused, that are service focused, sub 40,000 or 50,000 dirhams in terms of annual fees, and in that sense, potentially attractive to a much larger community of parents. So frankly, when you look at the UAE K-12 market, the key demand drivers are lower fees, higher value. Going back to what I said below earlier on, the people who benefit from education tend to view it as a service, supported by an infrastructure rather than the other way around. So I think that is one of the real opportunities. That said, investors who are able to acquire assets at good valuations and focus on real operational improvements may have an opportunity to create value and create some word of mouth. We're running out of time a little bit here, so let me fast forward to the last investment trend, which I think you can pay attention to. This is really an investment trend that has materialized in our markets, in my experience, actually within the last 6 years. And it is really related to the separation of operating companies and property companies. So in line with my starting comments about the need for investors to really focus on education as a service rather than infrastructure, I think we've recently seen, and when I say recently, I mean within the last 6 years, the rapid emergence of organized and in some cases listed vehicles focused on property assets as a standalone asset class. In the Dubai market alone, which you can see on, I think it's slide 36, we've seen several sale and leaseback transactions. And in the first instance, those were sort of private transactions. Now we have listed entities that do that. And we can expect more of that for high quality education assets across the region. When we look at comparable markets, let's take Singapore as an example. Diversified REITs all included education assets along with commercial, healthcare, and other real estate assets. And we've seen this trend play out in the UAE. Listed REITs in Saudi are likely to get in on this as well, and many of them are in the pipeline. I think from a financial investor point of view, for standalone school acquisitions, particularly those where property assets have been in family hands for some time, financial investors now actually have an opportunity to include SLBs post-transaction as part of the investment thesis, like never before. And in some cases, capturing equity value in the transaction is really driven by negotiating the right property transaction separate from the OpCo transaction. In some cases, the base case returns for family sellers, right? These are people who've had a school in their family for a long time. It's sufficient for them to cover their expectations. And in other cases, they're also happy to retain the position of being a landlord. And, quid pro quo, retaining a minority position in the OpCo. So I think skilled operators have the advantage on these types of transactions, more than financial investors, by offering the seller the opportunity to end one of their biggest challenges, which is the biggest headache they all have, which is running a school. And seasoned operators can provide confidence to sellers that schools will remain viable, run by the right groups, and at the same time valuable to them. So I think this last trend is an emerging trend. It's globally relevant, but it actually changes the game quite a bit. So let me end there. We're getting to the top of the hour. I know I've probably exhausted a lot of time, and I'll hand over to Ashwin, who's moderating.
Thank you, Jeremy, for that. That was quite informative. We have a lot of questions in. What we'll do is for those, and we don't quite have the time to get through them. So what I recommend is that for those of you who typed in questions and opted in to receive emails, we'll follow up with you individually with an answer. Otherwise, the questions and answers will be hosted on the SuperReturn 365 website. If you want to reach out to us directly, you can drop an email to anuja@parthenon.com, which is anuja.shet for Tango @parthenon.ey.com. And with that, I'll hand it over to Rob to close.
I want to thank everybody for joining us today. And for those of you who are going to be at SuperReturn in a few weeks, we'll see you there. And thank you all for your attendance, and look forward to meeting with you individually.